with our currency of the week, and that's euro-dollar. Euro-dollar, the world's most popular currency pair. Okay. Many traders like it even when it doesn't move at all. I'm frustrated by the lack of movement. But, well, that's life. So let's talk about it, and maybe it'll get moving. So, as I mentioned, not going anywhere fast, moving a lot on politics, clings to ranges. Currently, it's at the low end of the range. Who knows, maybe this time it will fall over. Okay, let's talk about all the moving parts and give you updates on the moving parts of the euro-dollar. So, as I said, politics have the biggest impact. Let's begin with politics in Europe. French elections, first presidential round on April 23rd, second round, critical one, on May 7th. We're only at the beginning of March, but every opinion poll matters. We have some opinion polls released on a daily basis, first round and second round figures, lots of confusing data, but picture remains clear. Marine Le Pen, the extreme right candidate, leads the first round. She has something like 25-26%. Macron, formerly of Emmanuel Macron, formerly of the Socialist Party, running independently as a centrist and the market favorite, is expected to win the second round. He's currently in second place with something like 23-24%, ahead of François Fillon, the center-right candidate, with 20-21. So if it's Marine Le Pen against Emmanuel Macron, he is expected to beat her by around 60% to 40%. Quite a wide margin, wider than Brexit polls, wider than the US election polls. Okay, but of course it's earlier. He has higher chances now, Emmanuel Macron, after another centrist, independent centrist, Bayrou, maybe I'm butchering his name, sorry for that, he quit the race. Fillon is still in the race. He had some personal scandals, Penelope Gate, we won't get into that. He likes Macron and he has lower chances of beating Le Pen. So markets favor Macron and he has better chances. Now everything changes on a daily basis, and I'm telling you all this because it does move the euro. Okay, widening out, as I said, daily French opinion polls move the euro. But before that, we have Dutch elections on the same day of the Fed decision. Now, in the Netherlands, the extreme right candidate Geert Wilders of the Freedom Party is expected to come out as the biggest party. That could give a boost to Marine Le Pen. They're, of course, friends. They had this extreme right-wing conference a few weeks ago. He's not expected to form a government. There will be probably some kind of a mainstream grand coalition, but it has an impact on the French elections. Netherlands is a relatively small country, and France is, of course, the core of the core, second only to Germany. In Germany, we have elections only in September, but news from there also moves the euro. Of course, it's the biggest party. There's a close race between the mainstream parties. So finally, Angela Merkel has a rival. The socialist candidate Martin Schulz, formerly Speaker of the European Parliament, is neck to neck with Merkel. But markets are not that worried because both are mainstream centrist candidates, okay? And the extreme right in Germany, led by Frauke Petry, the Alternative für Deutschland, is actually weakening on some internal fighting there and other reasons. It's a bit on the back burner, but we should watch out for that. Italian politics, other things on the back burner. It gets ugly. Internal fighting also there in the Democratic Party, in the center left, but it's still on the back burner. And Greece, the never-ending saga, the never-ending story, is something we should also watch out for. Again, French elections come first and the rest come afterwards, but these are all factors that move the euro. Lots of political stuff. Comment here by Ed: wouldn't follow the polls as they're always wrong, as recent history proves. Le Pen should get in just like Brexit and Trump. I don't think so. I think that, when we talk about polls showing a 20% gap, it's quite a lot. Remember that with Brexit, it was very close, 3-4%, and some polls actually showed Brexit winning. So it wasn't even the polls that showed Remain winning, they were within the margin of error. So it wasn't such a shocker. Also with US elections, polls showed Hillary Clinton leading with 3.5% in the popular vote, and eventually she won by 2%. Again, the system is different. It's the Electoral College, but it's within the margin of error. Of course, the outcome is different. Hillary Clinton is not president. Donald Trump is the president. But the polls are not that wrong. And if they, in France, they have a good reputation, and when it's a 20% gap, assuming it persists until May, it's a very, very low risk. Let's put it this way. Nothing is certain, but if we have the same polls a week before the elections, I think it looks much safer. Of course, lots of things can happen between now and then. So the polls now, of course, do not mean, well, not reflect what will happen in 2 months' time. Okay, so I hope to respond to your comment. Another comment here by Jax. Jax, how are you doing? Politics are a mess in any country, it seems. Yeah, I agree. Ed says, funny how Grillo reversed his anti-Euro stance, guess, to stay in place. Yeah, well, I don't follow Italian politics that closely, but I think that after Brexit, in many European countries, the pro-European sentiment strengthened once again, at least here in Spain. We had elections here 3 days after Brexit, and mainstream center-right PP party gained more votes, and in general, Spaniards do feel very European, so maybe the same thing happens also in Italy. Okay, let's continue with the talk about the euro. We talked about politics, how French polls have an impact. Now let's talk about next week's big event, the European Central Bank, and it already has an impact on markets now because the ECB looks at inflation figures. Now, Draghi, the president of the ECB, filmed here in the famous confetti incident, he sees inflation as transitory, and he has good reasons for that. Oil prices giveth, oil prices taketh away. Okay? Because now we're seeing how year over year, last year, oil prices were very low. Now they're back to, I wouldn't say high, but normal levels. And we're seeing a big year over year jump in inflation. This is the base effect. Okay? He also sees it as transitory. And as long as core inflation remains low, he has very good points over there. He also wants to consolidate the achievements by keeping the euro lower. Inflation can continue rising and exports continue receiving a boost. Okay. However, he's not alone on the governing council. The European Central Bank is based in Frankfurt. The German members demand to taper QE to withdraw some of the stimulus to begin changing policy. Now, the situation has improved, and this also justifies moving a bit back, but he would like to push as far as possible. Inflation figures released, well, this week already from a few countries, today from Germany, tomorrow for the Eurozone, are very, very important for the March 9th meeting. Watch the core data. If core inflation rises, the euro could rise faster, and the new forecasts next week are the key as well. ECB has 8 meetings every year, but 4 of them include new forecasts. So 4 meetings are more important than the other 4. Next week's meeting is one of the more important ones. Okay, so that's the ECB. Moving to the United States, talking about euro dollar. So moving to the dollar side, there's now a higher chance of raising rates on March 15th. Janet Yellen is wearing some hawkish feathers for a change. We'll hear more from her on Friday. The key for me for the Fed decision is wages. Non-farm payrolls will be released next Friday, 5 days before the Fed decision. If wages were very strong in December, we had a report about 2.9% gain year over year. But then we had another report on February. First of all, the revision pushed down the December figure to 2.7, and in January it was only 2.5. Why am I talking so much about wages? Of course, when the economy reaches full employment, then we have less job gains because there are less people to find for every job, and the competition for every employer pushes salaries higher. Okay, and that's what the Fed wants to see. And when salaries move higher, also inflation moves higher. So the situation is improving, but very steadily, very gradually, in a very frustrating manner. As I wrote here, watch out for Fed speeches. Dudley was certainly a killer, not a dud. He was very hawkish, but Yellen, of course, is number one. Your recent data has been mixed, but I think we should listen, of course, to the NFP figures and to Janet Yellen, to Fed officials. Okay. And US politics, we just heard from Donald Trump. So he focuses on nationalism, and I think there's a growing disillusion regarding markets in terms of how markets perceive him, and this weighs on the dollar. Again, the dollar is pushed higher now by the Fed, not by Donald Trump. So, in short, Trump prioritizes changing healthcare, Obamacare first, taxes later. He said that more or less in these words. At first, he has to know about the costs of healthcare, then deal with taxes. Markets want tax cuts, and they don't really care about what health insurance Americans have. Second thing is defense spending. Okay, so huge priority for Trump, not for markets. And if you cut on defense spending, if you raise defense spending, you push infrastructure spending to a later date. And he said that that defense spending will mean cutting expenditure elsewhere. Now, we're talking about foreign aid, but also talking about perhaps infrastructure. So all in all, it's not what markets wanted to hear. It's not the euphoric reaction back in November when they thought he would spend on infrastructure, cut taxes, push inflation higher, and begin a virtuous cycle in growth. So U.S. growth is not expected to jump very fast, not on government action. And in addition, it will take time. So even though there's a unified Republican government, things are moving quite slowly over there. Okay, so these are the moving parts of euro-dollar. Again, it's French elections, well, European politics, the ECB, which would like probably to push the euro lower, the Fed, which is pushing the dollar higher, and Trump, which is pushing the dollar lower. So many moving parts. Let's talk about what's next. I still see upside potential for euro dollar. That means stronger euro, weaker dollar on the disappointment from Donald Trump, and that the Fed will eventually hesitate to raise rates, depending on wages, of course, but the recent comments from Dudley make me rethink as well. There's limited downside potential from the European Central Bank. If inflation rises, Draghi will have to acknowledge reality. A bigger surge in euro-dollar could be seen in early May, assuming that Le Pen does not become President Le Pen. And but again, lots of moving parts here, lots of risks, political and from central banks. March is definitely a critical month, even though first 100 days end in April for Trump and French politics the presidential elections come in May. I think March with the ECB and the Fed decision are also very, very important. Monetary policy takes the reins once again. So to conclude this segment about euro-dollar, let's look at the euro-dollar chart. Mention again the big levels. Currently, we're hovering above support here at 105, round number. 105.20 was also a level we've seen in the past. Below that, 104.60 and 103.40, the 14-year low for euro-dollar. Looking up, quite a few short-term lines here. 105.90, 106.30, 106.80, 107.10. Stronger lines, 107.60 and 108.50. And even higher, of course, the round number of 110. Okay. So that's the euro-dollar segment. See here some comments from Ed. Trump was more polished since his inauguration. Yes, he had some lessons. Good speech. Yeah, he has the unions on his side. That's a huge plus. The unions, well, unions want better working conditions for American workers and more American jobs. I'm not sure that's what Republicans want. Yes, many former Democrats voted for Trump on his rhetoric about manufacturing jobs, how immigrants are stealing their jobs. I'm not sure that's such a big demographic. Yes, his speech was more polished. It was a speech, more important ceremony, better than his inauguration, and certainly much better than his recent Bizarro World press conference and the CPAC speech. So in many cases, we have this kind of Trump light, like this recent speech a few hours ago, and then a few days later, you have the Dark Donald speech with the huge amount of lies. And anyway, this was a better performance, certainly, but for markets, again, he was light on detail, still seemed like a polished campaign speech and not a detailed one. Sure, he has a new Secretary of Treasury, Steve Mnuchin, in charge, so maybe we'll get more details in the upcoming days. More details about tax, more details about infrastructure. That would be good for the dollar, good for stocks as well. Sorry.
Welcome to a market to end all markets. Welcome to FxPro.